Real estate is often considered to be one of the safest and most lucrative investments. And when it's managed well, it can provide stable cash flow, it appreciates steadily, it offers tax benefits, and it can offer great diversification. If the stock market is down, the real estate market may be performing totally differently. So it can be a really helpful tool to add into your investment portfolio. However, investing in real estate can take a lot of money. For most people, a home is the most expensive purchase they will ever make. And that's even before paying for maintenance and property taxes and all of the other costs that come along with buying a home. So if you don't have a lot of money, then you may think that you can't invest in real estate. But believe it or not, there are ways to invest in real estate even if you can't afford to buy your own house to live in. I'm going to talk about those in this video. Hey, I'm Lorianne. I'm the co-founder of Dow Janes and a money coach, and today I'm going to explain 3 passive ways that you can invest in real estate even if you don't have a lot of money. But first, if you want more tips for growing your money and building financial security, subscribe and hit that notification bell so you don't miss our newest videos. And if you want to learn the secrets of growing your money, be sure to check out our free masterclass. I will leave a link in the description. All right, 3 ways to invest in real estate, even if you don't have a lot of money. Number 1, invest in REITs. REIT stands for Real Estate Investment Trust. Essentially, it's when a company owns, operates, or finances an income-producing piece of property. REITs work by pooling funds from investors to purchase and manage income-generating real estate properties. They generate their income primarily through rental payments from tenants and distribute at least 90% of their taxable income to shareholders as dividends. So REITs are publicly traded like stocks, which makes them highly liquid. So if you bought a rental property and wanted to get rid of it later, and you did this yourself, you would have to go through the whole process of putting it on the market, making some renovations, hiring an agent, doing showings, not to mention negotiations and inspections and all of the other hassle that pops up when you have a buyer. But when you invest in a REIT, you're investing in a company that does all those things for you. So you can actually get invested in REITs for as low as $1,000. And like stocks, you can invest in a publicly traded REIT through a brokerage account. So instead of needing to go scout properties and scrummage up a down payment, it's literally clicking buttons to buy REITs on your computer. The second strategy is real estate crowdfunding. Real estate crowdfunding is a method of raising capital from a large number of people to fund real estate projects. Through online platforms, investors can contribute relatively small amounts of money to participate in real estate investments that were historically accessible only to large investors or institutions. These investments can range from residential and commercial properties to development projects or even real estate loans. Real estate crowdfunding platforms typically provide investors with opportunities to review and select projects, track their investments, and receive returns, such as rental incomes or profits from when they sell the property based on their initial contribution. Samples of popular crowdfunding platforms include Fundrise, CrowdStreet, and Realty Mogul. Now, I'm not affiliated with any of these organizations. This is not an endorsement, but they are places where you can go start your research. Now, it is important to remember that all investment comes with risk, and even though real estate is traditionally a very stable investment, it is not risk-free, right? When you're still considering making an investment in a specific property, you want to really think about the potential for that property to have a positive return and make an informed investment decision. The third strategy is by investing in real estate ETFs. A real estate ETF, or exchange traded fund, is a type of investment fund that's traded on stock exchanges and invests primarily in real estate related assets. These assets typically include REITs, real estate development companies, real estate operating companies, and other companies engaged in various aspects of the real estate industry. The difference between a real estate ETF and a REIT is that when you buy a REIT, you're typically buying share of a single company that is managing a portfolio of properties, whereas when you're buying a real estate ETF, you may be buying a sampling of a number of different companies that have business in the real estate world. So there's more diversification built into a real estate ETF typically. A REIT is like going to the farmer's market and buying a single sunflower, whereas a real estate ETF is like going to the farmer's market and buying a bouquet full of different types of flowers. The beauty of a real estate ETF is that it provides automatic diversification, which helps protect you from downside risk. You can invest in a real estate ETF through a brokerage account just like you would any other stock. I will throw some of the best performing real estate ETFs up on the screen. This is not investment advice, these are not financial recommendations, but they are for educational purposes only and meant to give you a starting point for your research. Final thoughts, even if you don't have a lot of money, you can still benefit from investing in the real estate market using these passive strategies. If you want to learn even more about the methods of successful investing, be sure to check out our free masterclass. I will leave a link in the description below. We've also made other videos on growing your money passively, which I'm going to pop up here on the screen. Feel free to check them out.